Hi, I'm Michael Newrock, and in this lesson, we're going to go over entering orders and splitting trades. Okay, so there is a couple of reasons you may want to do this. I mean, if you're using the Trend Profiteer Trade Assistant, then it will be fully automated to your specifications. However, there are times that you may want to take a manual trade. You may have missed a trade. A plethora of different reasons. So how do we do that? Well, we need to enter an order. That's the first thing that we need to do. I'm not going to talk today about management of the trade or risk reward or anything like that, but just simply entering a trade. Now, let's say we wanted to enter a trade in here. The overall direction is up. 4 out of the 6 are pointing up. There was even a alert just previously for a valid setup occurring. So we want to take a trade. For whatever reason, we didn't take a trade at the time. And there's a couple of different ways we can do it. We'll just click on New Order, this button up here, and we'll come up with this little pop-up window. So the first thing that you can do is you can adjust the lot size. They call it volume, but it's actually the lot size. So you may want to keep it at 0.2 or decrease it to 0.1 or even less, 0.05. If you're trading, we'll leave it at 0.2 for now, but you can trade higher lots. You can trade pretty much anything that you want. So if you wanted to increase it, it'd be 0.4 or 0.5. One lot is 1.0. Okay, but you don't want to be trading lot sizes that big unless you have a decent size account. So we'll just shift it back to manually to 0.2. And what you can do is you can adjust the stop loss and the take profit. Now there's different kinds of trades that you can enter or orders you can enter. The first type is market execution, which means that when you click the buy button, in this case we want to buy. If we wanted to sell, we would click this button. But in this particular chart, we want to buy. So we want to enter a buy order. And we don't have to place a stop loss or take profit in. But if we clicked on this button now, then, well, let me just put in the stop just for the heck of it. Say I've got the cross here. Let's say we wanted to place the stop at 144.40. So we'd place that in 144.40. And let's say we wanted to place the take profit at 147. So 147 there. Now, if we click this buy market button or buy button, then it's going to immediately process our order. So we'll do that now. And there you go. Successful order. We've got our stop loss in place. We've got our take profit set, and we can view it on the terminal here. This is a demo account that I have for developmental purposes, but you can see this order is now entered. So there's the order number, the time of the order, whether it's a buy or a sell, the lot size, the symbol. In this case, it is a GBP JPY or a pound yen. The price that it was entered into, what the stop loss is, what the take profit is, and what the current price is, and whether you're in profit or not, and how much buy. So when you open an order, you're always in a negative state, and that's because of the spread of the trade. Now, I won't go into any details with this other than to say that it's the way that brokers make their money. So you'll always find yourself a little bit negative. The bigger the lot size, the bigger you will be in negative because you're trading more per pip. Or in this case, it's to the next decimal place. So you're trading every 1/10 of a pip, and that's going to affect what your revenue is going to be, what your profit or your loss is going to be. So that's a buy trade. We're just going to close that trade off, uh, and I'll show you on another chart, say a that's the euro pound. Now, let's say you wanted to uh, lock in a trade at this time. You didn't want to wait or whatever the reason is. But in this case, we're looking at, in the previous example, we were looking at a buy trade. And in this case, we're looking at a sell trade because we're predicting the price is going to go down. So again, new order, and then you can enter your details for your stop loss. The stop loss in this case is above the entry price because you're predicting it's going to go down, the price that is, and your take profit will be, somewhere around here, wherever you want to place it. And then all you've got to do is click the sell button. So if we take a look at it, again, we won't bother putting details in, so I'll just click the sell, and there it is. That's a sell order has now been entered. So if I just bring the terminal up again, I can see the details here. And if I wanted to, then I could modify the stop loss and the take profit by right clicking and then clicking on modify or delete order. That brings up um, the original box, slightly different. And then you can place your stop loss here and your take profit. But we won't bother about that for now. So that's a example of a buy trade and a sell trade, with this one just now being a sell trade. So there's a couple of other orders that I want to look at. We'll go back to this new order button. Now, what you can do, as well as a immediate market execution, which is the market execution type, what you can do is you can open a pending order. So a pending order, there's 4 different types: buy limit, sell limit, buy stop, sell stop. So we want to sell on this particular trade. So there's 2 ways that we can do it. We can place a market entry order to occur around here, just below it. Say it's currently at 86.22, and let's say we wanted to enter the market at 86.15. Maybe we wanted to see price clear this cluster. So what you can do is you can say, okay, I want to enter the market with a sell order at 86.15, but not prior to that. Of course, you place your stop similarly, just above, based on the profiteer rules. But let's open an order now. So we can go pending order or click sell stop, and then we need to place a price. So it was at 86.15. Now again, I won't bother putting in the stop and the take profit, but you should do that when you're normally placing trades. So here we'll just enter it now, and there it is there. So you can see the green line is a little bit further away from the actual entry point, and that's because this market or this order is not an active order. And you can see here in the terminal, you'll see the details here, but there's no profit or loss because it hasn't been entered yet. It'll only be entered if and when the price gets down to 86.15. At that moment, it'll become an active order, and you can then manage it from then on. The trade will be live at that point. So that's a sell stop. Now you can do the opposite of that, which is a buy stop. We'll come back to this chart in a moment, but let's go back to our buy example. Let's say we wanted to get into the order, but not right now. We wanted to see it clear. Maybe we wanted to see it clear this parabolic SAR dot. So let's it's 145.31. Let's make it say 145.40. So it's currently at 145.09. So what we can do is open the new order, and again, instead of market execution, we're going to make this a pending order, and in this case it's not a sell stop, it's a buy stop because we're wanting to buy, and we'll place the order. Now you can actually just start typing in here, or you can click one of these arrow buttons and then the current market entry price comes up. That can sometimes be a nice handy way of doing it. So we've got a price in of 145.40 as a buy stop. So this is our order that we want to enter, but we don't want to enter it yet. We want this to be a pending order, and it'll only become active if and when price hits that point, including the spread. So we'll trigger a little prior to that price being reached due to the spread, but I'm not going to get into that right now. But essentially, that's it. You've got a buy pending, or a pending buy in place as a buy stop, as opposed to a sell stop. Now this case, it's not green because it's not within 10 pips. But let's say we want to, for whatever reason, get into the market a little earlier. We could say 145.17, brought it down a little bit, and now it's green. It's imminent. Well, it's not imminent, but it's close to the entry. So here you go. Just close this for now. Okay, so far we've seen a buy, how to enter a buy order, how to enter a sell order, how to enter a sell stop, and then how to enter a buy stop. So in this case, let's do it a little bit differently. I'll pick a different one. Let's say rather than a buy stop where you want it to become active at a certain higher point, let's say you want to get in at a buy at a lower price, say around here. So the market entry is here. So how do you do that? Well, you can enter a new order just as normal. I'll just bring the crosshair down for a second. Let's set it at 111.55. It's currently at 111.85. So this time for the pending order, we're going to set it as a buy limit. So 55, and there you go. Okay, the stop obviously would be placed here, and the take profit, around wherever you want to place it for a buy. But I didn't want to confuse the chart with the entry order. So this is now a buy order, but it's a pending, excuse me, and it's pending as a buy limit, which means that it's only going to be activated and become live if the price comes down to this level. If it does, it'll be triggered, and then obviously you want to hope that it's going to reverse and go the other way. Now, there is times when a buy limit could be useful. Let's say the price was way too high, say up over here, and you didn't want to enter at that price, but you would have been more comfortable at entering down here. That's when you would place a buy limit order. So slightly different to the buy stop. In fact, it's the opposite. With the buy stop, you're looking at entering a market if the price moves upward to a certain point, and with a buy limit, you're entering the market only if the price moves down to a certain limit. Now, finally, we'll do the sell limit. So previously we did a sell stop. We entered or wanted to enter the market if the price, came down to around here. But let's say we want to only get into the price, only get into the market if it say, popped up to here. So we would do the opposite of the buy limit, which is a sell limit. So pending order again, sell limit. And let's say we wanted to place it at 86.40. Okay, and in that case, this order won't become active. It's currently as a pending, as a sell limit, won't become active unless the market price moves up to this point. And of course, we are selling it, so again, we wouldn't want the price to ultimately move downward for us to make money, so, or make pips. So they're the four types of pending trades, in addition with the market execution or instant immediate orders that you can place. There's reasons for all of them, and it's great to being able to have that that knowledge of being able to do it if you want to at any stage. The last thing that I'll go over is splitting trades. Now, splitting trades means that you want to trade two positions independently of each other, as I've demonstrated with the Trend Profiteer system. So how do you do it manually? Of course, the trade assistant will open up split trades if you are able to trade with split positions in your geographic jurisdiction. And if you have set it appropriately to split trades in any combination you wish in your Trade Profiteer Trade Assistant. But if you want to do it manually, let's say we've been using 0.2 has been the lot size that we've been using. So let's say we want to buy into this market. Okay, we want it to go up here. It's just for the example. This is how we do it. Let's say we normally trade one position, which is 0.2 of a lot. So just for the simplicity of it, I'm going to split it 50-50. So we'll change that to 0.1. Okay, so that's half the lot size. And we'll just click the buy button. And there you go. That's the first half. We've got one position there at 0.1 of a lot, half the size that we would normally trade, which is 0.2 of a lot. So how do we get the second position? Well, we open the new order button up again, and once again click buy. Now you note that the lot size is 0.1, so buy, and there you go. We'll bring the terminal up, and there's your two positions. They both have different order IDs, both entered at slightly different times, and you can now manage them independently. For example, you can have one of them to have the take profit here around this level, and which is about 120 pips, and the other one to go for this high. So you can place your take profit here, which is around 280 pips. So I mean, regardless of what you want to do, and of course, the Trend Profiteer Trade Assistant is capable of a lot of ways to manage your trades. And it's as simple as that. If you miss a trade, you want to take a trade manually, and you want to take it as split positions, just open two of them at half the lot size. Now, you can also do that as pending trades for your buy stops, your sell stops, your buy limits, and your sell limits. As well as your market execution, instant orders. So that's all there is to it. Open two at half the lot size each, and you have two trades running on that same position, and therefore they are split trades. So that concludes this lesson. Until next time, good trading, live well, and I'll see you soon.